Welcome to our new video series, Keeping It Charged Up, powered by iHeart Real Estate with Alan Arctati and Katia Jacob. Today, we have a very special guest, Ajay Delarosa. He's an executive VIP manager with Rocket Mortgage Agent Relations. Rocket Mortgage is a nationwide mortgage lender, and we've been working together for a few years now, and we will be discussing different topics for the purpose of buying, selling, and refinancing your home. Welcome, AJ. Thank you for joining us.
Absolutely. And first and foremost, I got to thank you ladies for putting this together, because there's not a lot of real estate agents that has TV shows like this that create content to educate our buyers and our consumers out there. So thank you for having me here. A little bit about myself, guys. I'm an executive VIP manager with Rocket Mortgage Agent Relations. So what I do is build a business-to-business relationship. Particularly, my focus on independent brokers and agents in the state of California. And my job is to make sure that when you do business with me and my VIP team, myself as the manager, my bankers, my processors, pretty much the entire VIP squad at Rocket Mortgage, our job is to make sure we convert your clients to the closing table at ease with no worries. And most importantly, get them back to referring their family and friends over to us, because we do a great job. Absolutely.
You guys do a great job, because I know that there's a lot of people out there thinking that buying a home is just a dream. And we do this because we love to make this a reality for a lot of people. But buying or selling or even just refinancing a home right now, with the way times are, it really is, it could be stressful, right? And we want to make that experience and that process a very smooth one for you, so that you can make educated decisions. Buying a house is one of the biggest investments that anybody can make, or even just selling a home, because there's, tax laws and things they have to take in consideration. So we definitely want to be able to share with our audience that there's so many things that you can do to make your process more streamlined.
Absolutely. And I thank you for putting this all together. And I'm telling you this, when you mentioned a little bit earlier that it can be stressful, it's only stressful based on the people or team you work with. You want to make sure you assemble a very good team. Your team should be the real estate brokerage, the real estate agents that work within the brokerage, the boss lady in the brokerage, right? Like in iHeart Real Estate. Also, your mortgage lender team as well. So yes, it can be stressful if you are not working with the right team. But if you are, it's going to be as easy as walking on the beach. And everybody knows I love doing that. So.
Well, for us, we not just collaborating in this video series, but as a buyer or seller in any position, they're always going to need a lender in place or a real estate agent or broker in place, because we are there to help them stay out of trouble, right? And find themselves in positions that they're paying high interest rates, or, just not being able to take advantage of the things that they could be taking advantage of. So today what we're going to do is just keep it very basic, you guys. We're going to talk about the home buying process. For many of you who are first-time buyers, this is a really great way to get some information to really start planning ahead, because the banks do look at a lot of different things that will help you qualify for that loan amount. We're going to be going through a few questions, and Katia is going to be asking you and I, AJ, a couple of different things, so that I can answer questions on the real estate side and you can answer things on the home mortgage side. Sound good?
Absolutely. It takes two to tango. You need your real estate team, and you also need your lender team. Absolutely. Looking forward to it.
Yes.
Perfect. Let's get started. AJ, so as your position in Rocket Mortgage, what is your role, and what do you do to help buyers or sellers when they're in this situation, or when they contact?
Absolutely. 110%. So pretty much I could break it down in the process of a story. For example, let's say you as a buyer finds a house. A few options. You can go directly to your real estate agent, such as Anna Lynn or a brokerage. or you can go directly to a lender. Of course, Annalyn is very widely known in the community, so a lot of times they tend to gravitate towards her first. And so Annalyn will obviously make sure that she shows you the right homes, but she also sends you out to a trusted team that she's worked with before, like my VIP team at Rocket Mortgage. So that goes into what I do here. So my job as a manager, I'm also licensed to originate loans in California. I make sure that my VIP banking team, I oversee a team of bankers here in the company. So let's say Annalyn refers you over. I have one of my top bankers who is highly decorated here, who's been a top producer, a closer, who's very well communicative, like Jonathan Socken. He goes ahead and gets you pre-qualified. And my job is to make sure that my team is executing their job at a very high level, meaning that number one, you know exactly or foreshadow exactly what you're qualified for, what's needed to take your pre-qualification to the next level, such as we underwrite you up front. We don't just settle for pre-qualification, we underwrite you up front, so that we have a very strong offer, which removes contingencies up front, you know, income, assets, and credit. We'll talk a little bit more about that and how powerful that is in getting your offer accepted. But we want to make sure you're well taken care of, and you're most important in getting the best deal. Especially in the consumer market right now, you're shopping multiple different lenders and this and that. Totally fine. I do the same thing. You know, everybody does that. We're all consumers, but we're here to make sure that you get the best deal, best service nationwide, meaning that we're available to you 7 days a week. And my job is to make sure that my team members, such as my bankers, processors, are all executing at a very high level for you. So that way, your biggest purchase of your life, your biggest investment is definitely well thought of. And most importantly, you enjoy and have fun with the process. Yes. I'm telling you guys, it doesn't have to be difficult. It's all about the team you work with.
Yes, that is so true. Like, I have been out on the field and I've actually had clients come to me where they fired their current realtor because either they weren't available, they didn't answer their phones, or because they just weren't knowledgeable enough, or they just lacked confidence. And yeah, there's just several reasons why. And so it's really important for you to interact with a very active, full-time realtor to help you get through the process. So again, just to kind of let's start from the beginning. If I was a buyer and I'm first-time home buyer, where would I start? AJ had just mentioned quite a few things, but first thing you want to do is, yes, reach out to a loan officer or lender or reach out for a realtor.
A lot of your real estate agents are social connectors. They're very resourceful. I know, Annalyn, that's why I've been doing business with you for many years. You've been doing this for like 15 plus years, you know, even though you don't look like it, you look very young. You've been doing this for a very long time. But you do have a lot of connections. Let's say there's a particular loan program. As a real estate agent, that's why I love working with iHeart Real Estate Agent. It's because you guys are always up to date with what's going on in the market. You know the latest resources there. You also know the latest discounts that a lot of lenders have to offer. So your job as a real estate agent, of course, is to show them the perfect dream home to match them. But most importantly, is to provide the resources, you know, because I have a ton of connections with a lot of lenders. If you're, well, here's what I'm going to tell you for all the buyers, and you guys probably notice in general, if you're a very high level person, a lot of people want to work with you. Therefore, when people reach out to you, you get all this information and you have a lot in the back of your pocket. So that way, as a real estate broker, you know what to provide them for different lenders. And for me right now, obviously, I have a lot to provide. That's why you and I have been working, because I'm like a jack of all trades here in the company. So.
Yes. So let's talk about loan application submission. So when a buyer is looking to get pre-approved for a loan, there is a application that the lenders will provide you. It's called a 1003. This will ask you for your information in its entirety, right? They're going to be asking you questions about your primary residence, your current job position, your assets and liabilities, and it's going to have a series of questions, whether you've been in bankruptcy, foreclosure, or any of those things. So what you want to do is really take the time to fill this out, because they're also going to run your credit. There's a few things that you need to understand when the bank is looking at your application, because you are going to be called a borrower. If you're a married couple, or, you know, just two investors or partners that are trying to buy, it's a always called a borrower and a co-borrower. So you can apply together. But the banks are going to be looking at you guys based on individual credit and things like that. So when you're submitting your application, you're going to also have to attach some documentation, some personal documentation, which is going to be 2 years filed tax returns. The banks are looking for 2 years filed tax returns. They are looking for 2 years straight employment. They're looking for straight employment with no gaps. Now, if you have had a job for 2 years and recently quit and moved to another company, just know that as long as you're in the same line of work, then they can keep your 2 years consecutive. However, if you go from one position to another position with a different company, then you have to restart that 2 years until you're at that current position for 2 years. So keep that in mind. The other thing they're going to look at is how much of a loan amount are you applying for? What's the purchase price of your house? Because they are going to look at how much down payment you're coming in with, and they're going to look at your overall debt to income ratio. And that's going to be based on everything that's on your credit report. Because again, they're looking at your entire profile. That is what's going to determine how much you can qualify for as far as loan amount. Now, again, each county, right, AJ, has different, we call it conforming loan limits. So depending on where you're buying, the county has these loan limits, and depending on how much down payment you're going to put will also help determine how much of the house you're going to get, like purchase price. So keep these things in mind, because in my opinion, this is what I see, and correct me if I'm wrong, AJ, you know, when we run credit, they're looking at a few things. They're looking at the credit score, and they're looking at what's on the credit, debt to income ratio. They're looking at your total monthly payments. Yes, they look at loan balances, but they're looking at how much is your current monthly payment, because if they add a mortgage payment to your credit, what is your total debt to income ratio? And if you're with a partner or, you know, a co-borrower, they look at the combined debt to income ratio. And so there's different loan programs like FHA, Federal Housing Administration. There's conventional loans that's backed by a lot of Fannie, Freddie Mac, or what is it? Fannie Mae, Freddie Mac.
Fannie Mae and Freddie Mac. Right.
And then there's VA loans, right? So VA is great. It's a great product, you know, for buyers to take advantage of, because they pretty much give the veteran the down payment money. However, when we're on the field, you guys, and depending on where you're buying, our communities have different market trends. So home prices, you know, whatever the starting list price is, you know, may not be the price that it sells for, because in our market area here in the Bay Area, we're getting multiple bidding wars that are causing that price to increase. And so when we look at the shifts in our marketplace, because our marketplace is shifting based on, you know, the economy and things that are going on in our world. I mean, there's so many things that have just changed because of COVID. We really, really, really want to make sure that you guys understand what the process is and what AJ's process is as a mortgage lender, so that you really, really can make these, you know, accurate decisions and put yourself in a great place, you know, determining whether now's the right time to buy, or do we need to plan for it so that you're in a better home buying position. Right, AJ? I mean, wouldn't you say that'd be like everything?
Correct. Yeah, correct. Absolutely. And again, and for the audience that's watching this right now, all the buyers, investors, you know, small business owners, I want you to know that, you know, what Annalyn is saying is that there's a lot of things that happen throughout the whole buying process and getting you approved. There's a lot of intricacies there, but just like when you go to a doctor, right? When you go to a doctor, they tell you how you feel, they tell you the diagnosis, right? But they actually break down the whole science behind exactly what's going on with your body. They can, of course, but at the same time, you know, I don't have a PhD, and you're not licensed as a mortgage originator, or you're not licensed as a real estate investor or a broker. But that's why you have to have a team like us. And our job is to simplify everything for you. So for example, everything that Annalyn just mentioned out there can be broken down into 3 parts when you want to get qualified. So the 3 parts are broken down into number 1, your income, number 2, your assets, number 3, your credit. So if all 3 things align, income, assets, and credit, you're in great shape. So we're just talking about debt to income that goes part into your income, right? And also perhaps your credit too as well. So all those things can be categorized into those things. And our job as your mortgage lender, your VIP lender, is to make you understand in a very simple way. So that way you can make the most sound decision, and we'll do all the legwork up front for you, you know? So, but yes, I do agree with you 110% about all the facts there. You're straight on point, Annalyn. Feel like you're going to take my job now. Don't do that.
It kind of takes us into underwriting, right? Because like you get pre-approved. That's the first step. Ultimately, the first step, because you, as realtors, we need to kind of know what your position is so that we can help guide you better and say, hey, look, this is what the market's doing here. This is what the market's doing here. What are you more comfortable with based on also what the type of home you're looking for? We can help you basically assess where you could buy a house because, again, we want you to be comfortable and confident with your decision. So that actually wraps up the pre-qualification process. And, it's really important for you, again, to just kind of talk to your realtor and your lender so that you can go over what the next steps are.
The next step is the exciting part. Now you're able to shop around to find your dream home with your lender and work together with your realtor to find that home. And once you write that offer and it gets accepted, AJ, can you go over the next steps of what happens after?
Absolutely. I know, first and foremost, Katya made it super easy to get the offer accepted. Ideally, it is, because remember, your team does all the hard work for you. Annalyn and I do all the hard work for you. So behind the scenes, when you submit the offer, say, Annalyn, submit an offer. But you don't know that Annalyn and I, because she has a lot of connections with all these folks in the real estate industry, listing agents. So imagine Annalyn being like your high-powered defense attorney, and then the defense attorney knows the prosecutor and also knows the judge as well. And the job is to make sure we go ahead and get negotiated. And I'm there right behind her, also making sure that the listing agent knows how powerful your approval letter is. So overall, yes, we get the offer accepted. We do all that hard work. Here's the fun part, guys. So you're so close to the closing table or the keys to the house. At this point in the process, you've already submitted your necessary income, assets, and credit documentations. Remember, there's 3 parts: income, assets, and credit, guys. That's all you need to know. And what's left over is income, assets, and credit, right? So all 3 things are aligned. We're at the closing process, and what we need to do is get you from the offer accepted to the closing table where we can hand you the keys, right? So pretty easy. At this point, you've already submitted your necessary documents for your income, like your pay stubs, W-2s, assets, your bank statements, 401k, whatever security you use, and also the necessary credit documents that you need, right? Super easy stuff. So what's left over are third parties. Now you're probably thinking, what are third parties, AJ? Well, these are things that we don't necessarily have control over, such as number 1, the appraisal, and number 2, the title company, and most importantly, the insurance. Now the insurance, that's your only responsibility, guys. If you're watching this, you're a borrower, you're a buyer, please don't drag your feet. Find a good insurance company out there and insure your house as soon as possible. So that's your job there. That's all you really need to do. And obviously, your job is to make sure that you maintain a good credit. You do not take all your credit cards and start charging it, or don't start getting your credrit pulled, buying the new Porsche. Or I know, Annalyn, you have a lot of high-level clients that has a lot of good money, and they want to spend a lot of money, but you're going to tell them not to buy that new Porsche or that new motorcycle, and also don't go to the casino and start gambling. So that is your responsibility as a buyer. Now, everything else is working behind the scenes with appraisal, which Anna Lynn, your lender, has no control over of. So think of your appraisal is just their job is to make sure that the seller is selling the house for the right price based on the market. So for example, let's say you go to a grocery store and you find an apple there that's worth an apple for $5. And you're thinking, whoa, this apple is like $5, but I don't get it. That store across the street is selling it for $2, but the store across that street is selling it for $1, and the other one's $3. So your job, the appraiser's job, is to make sure that the house is being sold at a fair value, right? We're not going to get too into the appraisal part, you're like our common enemy or a common friend, a lot of times it depends on what they appraise, but hey, just know that the appraisal's job is just that, to make sure the house is being sold to you at the right value. So number one, so oversimplify that. Number two, title work. So these are third parties, appraisal and title work. And title work, think of it as your lawyer, right? Their job is to make sure they research the house, if there's any specific liens at a house, because you don't want to buy a house and find out next thing you know, there's a lot of debts that's incurred in there that you are responsible now for paying off. So they do a title search in the county, and also they want to make sure that the house that's being sold are actually sold by the right people. Is the seller of the house actually legitimate? Most of the time it is, but you can never be too careful, right? What if that's actually the deceased son of a mom? Then you have some legality of the buyer or the seller. Then you have some legality issues. So overall, your appraisal and title are the main things that's in the closing process. After you insure your house.
And inspections, you guys, let's not leave that out, because with inspections,
yes,
the house has to qualify for the loan. So if it's a fixer-upper and it has too many issues and it's not habitable, it's not going to get approved for that home loan. So these are some things that we, also need to keep in mind, is that the home does have to qualify for the home loan, and it needs to be in a habitable condition. I mean, there's some minor repairs that they'll allow, but again, it's just, if it's really bad, then, that's a different process. But you're right. And to touch a little bit, AJ, on the appraisal, I think what you just really have to understand is the bank is not going to loan you any more than the appraised value. So if your purchase price, for example, is $500,000 and that home appraises for $450,000, then the bank is only going to loan you up to $450,000, and we have a gap in between $450,000 and $500,000. So that $50,000, either you would then ask the seller to reduce their price to $450,000, or you come in with the difference in cash, or you guys negotiate. So there's some things there that you have to keep in mind. And sometimes, AJ, depending on where the property's at, correct me if I'm wrong, you may be able to even get appraisal waiver, right? Because last time you
I love those. Yeah. Anytime we eliminate the third party, anytime we eliminate the appraiser, I am one happy camper. I'm telling you that. It's less things to worry about that I don't have control over them, because we don't. And I don't. I love those, and it puts a smile on my face right now. See that? So I love getting those because it does help our offer get accepted as well. And as a company, Rocket Mortgage, my company gets a lot of those just because we have a very good relationship with Fannie Mae, because we do clean and closable loans. So they're a little bit more forgiving with our qualification of our clients. So typically how you get those is that, number one, your credit score is pretty high. Like, let's say you're above 700. And most importantly, you put over 20% down. So therefore, it minimizes the risk. And Fannie Mae says, our funder, people think that Rocket Mortgage has the money. No, it's our funder, Fannie Mae, FHA, VA. They say, you know what, AJ, I'm going to let you guys waive the appraisal. You know what, you guys have proven to us you have clean, closable loans in the past, and there's no risk involved in this. So, and I'm oversimplifying this, right? But now we don't necessarily need the appraisal right now. So at all, so that's what I love about that, so
exciting. I get excited too when we get appraisal waivers. It's so cool.
Oh my gosh, yeah. We can close. I've had an appraisal waiver before. I closed my loan in 15 days.
Yeah.
And who wouldn't want to get in a home in 15 days?
Yeah.
Yeah.
But these things are somewhat of the technical side, and which is why you need a great team to work for you so that you can actually take advantage of some of these things that you may not be aware of.
Oh, 110%. And the thing is too, we don't expect you as buyers, investors, just regular consumers to know all these facts. Just like you consult a lawyer, just like how you consult a doctor, it's good to consult your real estate agent, your real estate broker, in this case, an agent, Katya, or your mortgage loan originator, banker, or lender. Because we're the professionals at this, and we're here to guide you to the right direction. At the end of the day, the benefit is that we do such a great job. We educate you that we want you to refer your family and friends over. And that's how we get the majority of our business, based on referrals. You tell your family and friends over about how well of a job we did here for you, and they all come. They come in bulks.
Yeah.
They refer their uncle, cousin, and they refer more,
Yes.
So,
I think the most important thing for everybody to know is that once your offer is accepted, you are now in a contractual agreement. With that agreement, there are deadlines that the borrower has to meet so that you are not in default of the contract, because there are things that can occur and you can be penalized, in which you may have to come out of the pocket a little bit more. And is what we do to help support you, to kind of guide you through the process. So these are things that you can avoid. Again, because, contractual timeline, trying to get you those keys to the house. You guys, we have contingencies in place as well. So talking about the appraisal, that is a contingency. All right. And a contingency, we like to say, is a safe zone for the home buyer. So as long as you have a contingency in place, then you are entitled to a full refund of your deposit should you decide to cancel your contract within that contingency period. Okay, so I don't really want to get too technical, but it's good for you to know, because there are 3 contingencies within your contractual contract or obligation. You have a loan contingency, an appraisal contingency, and an inspection contingency. And we like to say that the inspection contingency is the most broadest, because with that, you can actually cancel for any change of heart, any, given reason technically. But for an appraisal and a loan contingency, those are very specific. So if your loan was denied, then you can be entitled. However, if you remove those contingencies in writing, then at that point you could be liable and be obligated to pay damages, and the seller could keep your deposit. So we want to make sure that your lender and your realtor are on the same page and communicating, and that you as a borrower understand what is required of you to also help us make this process a lot more smoother, because we are in a timeline, you guys. So based on your contractual timeline, you just can't drag your feet trying to get the lender documentation. This is what causes a lot of stress for all the parties involved, because in a real estate transaction, as AJ was saying, you have the lender, you have the title reps, you have inspectors, you have your agents, the sellers, the buyers. I mean, there's so many parties. They're not a party to the contract itself, but they're third parties that are involved in trying to make this happen for you so that you can get those keys and we can make this really exciting for you and keep you out of liability. But again, just be aware that you guys do have an obligation in this process as well, just as much as we do. And again, you just can't really drag your feet trying to get documents to the lender, or, take your time in reviewing those inspection reports. I mean, I understand it's a big decision. Nobody wants to put you under any pressure or rush you, but at the end of the day, you have a contractual obligation that you have to meet. And if you have a change of heart, you have to communicate with us so we know how to better serve you and protect you from liability.
I agree 110%. And there's a lot of ways in that we can actually help speed up the contingency dates or meet those contingency dates. Obviously, not many lenders actually do this, but we underwrite our clients up front. So income, assets, and credit before we even get an offer in. So we do get the offer accepted. We're already way ahead of the game. that income assets and credit part has already been done. The only thing that's really needed is like appraisal contingencies and also inspection contingencies, like Annalyn mentioned.
Yes. Yeah.
And also insure your house, please. Don't drag your feet. No, I swear, Annalyn, people will take their time with that. It's like, you gotta like insure your house.
He's saying when you get pre-qualified, you're going to submit all your documentation up front, bank statements, paycheck stubs, tax returns, anything that's going to show proof of your down payment. So any asset accounts, things like that. But once your offer is accepted, you guys are going through an escrow process, and the lender still has to go through underwriting. So when your file is being underwritten and now you've got conditions, you have to make sure that you're able to meet these conditions to get the final loan approval, because without that, the bank is not going to fund your loan. Okay, so we just want to make sure that you guys understand that there is a process, and we do try to speed things up. But we're here to educate you guys today. We're here to educate you guys today and share with you, what this process is, so you have an expectation. And again, if like, not to go too deep into this, because I know we could this is another broad topic, but if we get the question a lot, if I'm a business owner or versus I'm a W-2 employee, how does that affect me? And what are the banks looking at? I mean, you're going to have to come up with double the documentation, because now the banks are looking at your business and then they're looking at your personal. So this is not a scare tactic to show you there's a lot of pressure, to put a lot of pressure on you, but it's good for you guys to know these things, so again, what is expected of you. So everything is 2 years, you guys, 2 years filed tax returns, 2 years straight employment. Right. And then, of course, good, stable income. So, with the different loan programs, FHA, VA, or conventional, these loan programs will allow you to qualify for a home depending on your current qualifying status at that time. So if you have a lower down payment or a lower credit score, FHA will actually allow you to still buy a home. They're a lot more flexible. But there are some things behind that where you may have to pay mortgage insurance on top of that monthly payment because you came in with the lower down payment, as opposed to somebody who's going conventional, right? That can put 20% down. They don't have to pay mortgage insurance. They don't have to pay mortgage insurance on top of that monthly payment. Now, one thing we didn't go over, AJ, was HOA.
Oh, gosh.
Let's just touch on it a little bit, because I think
just a little bit.
Yeah.
You know me, I don't like things. I don't like things that I don't have control. I'm not a control freak. Maybe a little bit when it comes down to business. But when it comes down to appraisals, which I don't have control over, when it comes down to HOAs, which I don't have 110% control over, because you have to make a submission, you have to respond to it. They have different HOAs have different ways that you have to submit it. It's not a person you contact. Sometimes it's a website. And what you do is wait, and you call. Hey, did you fill this out yet? Did you fill this out yet? So, and that bothers me, but it's a necessary evil. But there's ways that our team can go and expedite that, because I have a condo team. I also have Annalyn who can assist me to make phone calls and say, hey, can you get a hold of this HOA? And it's like, why are you having to respond to our email yet? Or, our condo questionnaire, so.
Yeah. So basically he's saying the condo questionnaire is something that the lender is going to require. So that also takes time, right? Because it's, again, a third party. We've got to get disclosures from the HOA company in order to fill a requirement or condition for the bank. So in regards to that, when you're shopping for a house and you're pre-approved for a certain price, depending on what your monthly payment will be, we have to factor in that payment, because usually you're paying principal, interest, property tax, and insurance. And you're going to hear the term PITI, right? So when you're factoring your monthly payment, that's what it includes. It's principal, interest, tax, property tax, and insurance. Now, if it's a condo you're buying, then now you got to add that condo payment on top of that PITI. So just know then, that the banks are going to look at debt to income ratios, and again, qualifying you based on demographics and county loan limits is also going to help, determine where you can qualify to buy. So, I mean, not trying to get too technical,
But again, this is all we do at the back of our end. This is everything that we do for you. So it's good to know these things just to educate yourself, but it's not necessarily something that you need to do. And when you do have questions, you just call me. My team and I are available 7 days a week. Annalyn's available 7 days a week. Like you have questions about it, ask. But this is everything that's happening behind the scenes, and all you're doing right now. It's just like you go to a movie, right? You watch a movie. Do you necessarily watch how did they make the Avengers movie? No, it's like you just sit there, you watch a movie, you enjoy it. You don't need to know how they created the special effects. You don't need to know how the scripts they read for acting Robert Downey Jr. No, you don't need to know all that. It's just you enjoy the movie, and that's what it really is. You just sit back, relax. We'll ask for here a document here and there, and that's it.
Right. Right. We're just here to let you know a little bit more about the process, but this is why you're hiring us to do all of these things for you to alleviate the stress, right? Exactly. And what this video is really made for is so that we can alleviate that stress up front.
Yes.
So make that process a lot more fun for you when we're out on the field shopping for homes. You can just, again, you can make these decisions while you're shopping and feel really good about it. I mean, that's what we want, right, Katia?
Yes, definitely.
So again, when you have an HOA, this is for condominium. I just want you guys to keep in mind that when you're qualifying for a residential loan, this is actually anything. You could buy anything from 1 to 4 units and below. So that could be like condo, townhome, single family, duplex, triplex, and fourplex. And of course, right now, we don't want to spill everything out at you in one video. And this is why we're making this a live video series. And we have more to share in the coming weeks. But again, when you get into 1 to 4 units, now we're going into an investor type of situation. And so we will love to go over that with you in the next few weeks. But it's been so fun. I'm really enjoying the time with you, AJ and Katia. Thank you for collaborating with us. And we are really looking forward to continue to do more business with you, and just excited for the holiday season and what's to come this coming year.
Thank you so much. And this is why I heart you guys and I heart real estate. So I love it. So thank you so much for having me. I look forward to educating a lot of our buyers and investors in upcoming videos.
Thank you so much. You have a blessed one.
Thank you, guys.
You.
See you on the next one.
Bye, everybody.